Welcome back, Alpha Hunters. Hopefully, everybody's having a very tubular Tuesday because the market is having a very tubular Tuesday. Yeah, I mean, nice bullish action, bullish action here to kind of start out the day. Nice little gap up this, very nice quick gap up here. Ooh, 0.4% of a gap up. I believe Monday we actually gapped up like 0.5% or so. Kind of just hung out there, not really doing a whole lot there to start. Then just a nice little bullishness for about an hour and a half, and then been kind of choppy. A little bit of an uptrend here, kind of steadily, kind of through the past like hour and a half or so, but nothing crazy. Really, a lot of the action was really had in that first hour. So outside of that, not really too much going on. We did have a little bit of a pullback as we went into yesterday's close. And the question is going to be, is now a good time to be bearish? Well, I would probably lean on that side of it. We did have a nice gap up here on the Qs. Nice little bullish run there for about an hour sideways. Nice little run here over the past 30 minutes. Looking pretty good there. IWM, nice little bounce this morning. Nice gap up, nice bounce there in the first 30 minutes, then sideways. A little bit of an uptrend here the past 45 minutes or so. Qs, very kind of choppy uptrend throughout the day. Or this is the DIA. The DIA, nice little choppy uptrend throughout the day. Okay. RSP. Yeah. I mean, it looks kind of strong there for the first hour and a half. Sideways for about an hour, and then nice little uptrend here for the past 2 hours. Okay, so the RSP is up 1%. The DIA is up about 0.75%. IWM is up about 2%. Q's up about 1 2/3. SPY up 1 1/4. Okay, so RSP kind of making its climb here. Yeah, I mean it's about 0.75 away from maybe getting into this low air if we do continue to bounce, maybe tomorrow or so. The DIA is kind of getting into an interesting spot where we got a lot of these lows back over here. Also, kind of this low right here where we bounced here a couple weeks back for a couple days. So it's getting really kind of close to those levels, kind of getting into that area. So not bad spot to start looking to be bearish there on the DIA. The IWM, kind of mentioned this past couple days, that 199 level, which was kind of this top here. So 199 about 200, kind of mentioned that the other day. That's probably the area you're probably going to be looking more to be bearish off the IWM. And that's, kind of where those moving averages are right here for the 20, 50, EMA. Okay. Qs. Qs. How are we doing here on the Qs? Well, not bad. Not bad. We are getting close to that 10 EMA. Yeah, I'm just not really all that confident right here on the Qs. We moved pretty good here the past 2 days. Obviously, we do have some moving averages still above us, or above the Qs there. So I would say dipping toes into be bearish, probably not a bad idea. I could still see maybe some higher moves on the Qs though. SPY. I do like this spot a lot. I like this 50 EMA retest. I could also see it come up to that 20 or a little bit past that 50. And then maybe break it back down as we go into the end of the week. A little bit too much optimism kind of coming out and being bullish this week. Yeah, it's not a bad spot to start seeing maybe a little bit more of a retrace down, some consolidation. Yeah, it's just kind of what I'm thinking. I can see a little bit higher move on the SPY, but also this is probably the zone area you're going to start to look to be bearish. So I dig it. I dig it. Yeah, it's just going to be tough to say like this exact spot because there's not like a super solid support and resistance spot. Maybe right here. You got two lower wicks back here from March. It's kind of also where the 20 EMA is. So maybe we move up to that level. So maybe that happens maybe tomorrow morning. We'll see. VIX continuing to pull down. Okay, pulling back on the VIX. DXY is having a pretty good breakdown today. We look intraday. We had a nice little drop off this morning, and it kind of coincides with this 8:45 or really 9:45 Eastern time. And if I turn on the calendar, well, what came out at that time was S&P Global Composite PMI Flash, Manufacturing PMI Flash, and Services PMI Flash, and all of them, I guess, were under what the prior was, and even the forecast here for the manufacturing and services PMI. But the thing I'll say is, I can't think of a time that we've ever seen these relevant, and I'm dead serious. I can't think of a time where those have ever been relevant. So it's almost like the market isn't is. I don't know, is wanting to be hopeful, I guess. Maybe a little too hopeful, but I just can't think of a time where those economic metrics have ever been important or mentioned like, hey, these are things you want to be on the lookout for. So that kind of coincides with some of the moves that we saw in the dollar breakdown this morning. But it doesn't really mean much. We're not horribly breaking down, and I think really, if anything, you're probably more looking for the move down to these two tops. So around the 105 area probably would make some sense to me. So yeah, if we get that move down to the 105 area, I would be much more willing to be bullish there. But also, typically, dollar, if it does have this huge move and deviation away from the moving averages, like I've mentioned over the past week, like, hey, you typically don't want to be kind of chasing that because it doesn't continue to deviate away from the moving average. So I kind of mentioned before, like, hey, you'd be wanting to be bullish off of any pullback into that TNMA. Yeah, okay. I mean, it's done that before in history. So why not? Why not try to do it, right? I mean, we had a pretty large deviation here, just huge outperformance several days back in September. It pulled back into that 10 EMA. So yeah, I mean, I could definitely understand, being bullish down here at these spots. I mean, has it looked? I mean, most of the move today all came from this one 15-minute candle, right? I mean, mostly just been down in those lows, so it's not like it has continued. So yeah. GLD gold continuing to pull back a little bit. Nice little gap down. Let's see, what does it look on the futures? So futures throwing a pretty large lower hammer there. Interesting. I would just be bullish on any dips. I mean, that's all I really got for that one. It's had such a large move here over the past couple of weeks that it's kind of a tough one. 10-year yield not really dropping off today. It was actually kind of strong. Go to that 15-minute intraday time frame. You also see it had a reaction same time as we got all that PMI stuff. So, I mean, it's not breaking down. So we'll have to see what happens tomorrow. It's sitting right on top. It bounced off that 10 EMA today. Have to see what happens tomorrow. For me, for right now, to me, it still looks like it's just consolidating. Maybe until we break this huge lower wick from Friday, then I'd be much more willing to say, okay, yield's probably going to be moving lower. But it doesn't look like that's going to happen tomorrow or Thursday. So 10-2 inversion looks somewhat decent here. Got a lower wick Friday, got an upper wick yesterday, broke that upper wick today. That looks pretty good. We might continue to see the 10-2 inversion continue to move higher. Let me take a look. I didn't look at the 30-year yield yesterday. I mean, look at this thing. This thing looks a lot more consolidation happy than the 10-year, right? I mean, we had a nice strong move. We've had several days sideways here. This looks a lot better on the consolidation. Have to see what this looks like tomorrow, but that looks pretty good. If we start to make highs over Monday, Tuesday here on yields, I would expect this thing just to continue higher. What does the 2-year look like? 2-year doesn't look too bad. It was trying. Look, it was trying to kind of break these highs here the past couple days, but pulled back Monday, Tuesday. Okay. Yeah, yields. They definitely look like they're consolidating across the timeline, well, across the curve, but it's not. I would say the 10-year actually looks the most bearish out of the three I just looked at. So, anyways, HYG. All right, continue to push higher on the HYG. Nice spot. I like it. Okay, HYG. Not looking too bad. Looks pretty good here the past couple days, but that is a quick run up to like a previous support level that we previously broke down right here. This is kind of where we bounced, and then we broke that down. This is exactly what we're retesting into. So yeah, that was kind of the bummer part about breaking this low, because now you got all of these previous support levels, which you can just say that's just one big zone there that now you have to fight and get back through on the HYG. And we'll see if it's able to do it. LQD trying to curl up, not as bullish here the past couple days as the HYG. Where's that long term? Oh, it's below the 200. Man, that stinks. Well, I mean, it doesn't look great. How's the TLT look today? So this is where I would say like I'd be much more willing to be bearish on the TLT. I mean, we tried to break down the lower ends of this channel. We bounced into. We're going to go sideways here 5 days now. I would just start looking to be bearish on this thing, looking for the breakdown, looking for yields to probably break higher, and yields look like they're consolidating pretty good. All right, sector rotation, sector performance for the day. We can see that materials had a pretty good gap down this morning, but definitely lower end of the day. Staples also underperforming. Energies, utilities, financials all underperforming there. Real estate looking kind of underperforming there. It's kind of interesting because we're not really seeing yields do all that well, but they are I mean, they're still up. Real estate's still up 1% on the day. It's just not outperforming. You got discretionaries kind of in line with the market there. You got healthcare, industrials, tech outperforming, communications leading the day there. All right. And we got energies. As far as intraday, energy's looking pretty good. Communications, tech, real estate there, healthcare a little bit kind of in line with the market there. Discretionaries, industrials, utilities, and materials kind of underperforming there. Financials underperforming, and staples underperforming intraday. So staples really hasn't done anything. Kind of where it gapped up, kind of where it opened at, is basically where it's at right now. So there's two things I'm going to bring up real quick. There's two things that might not be here on the news headline here, but apparently the New York Stock Exchange is putting out feelers to, I guess, a lot of the traders and big banks about doing 24/7 trading or 24-hour trading. And there probably would be a break in the action, kind of like the futures market where there's like a break for an hour to separate, and that way the market officially closes for one day. They do some settlement stuff, and then it reopens like an hour later. I don't know what their plan is, but anyways, there might start to be some rumors, or you might start to see some things about that. I think some of that stuff has been in the news here the past day or two. There's nothing official coming, but if that does, then we'll kind of delve into that later on. The second thing that I will take a look at is the XLF. Now, I just kind of want to throw a scenario out there for you. and one of it goes to yields and the Fed funds, and one of the things that we're seeing, if the Federal Reserve doesn't feel like they need to raise or do anything with if the Fed funds rate, okay, the Fed funds rate and yields and interest rates continue to move higher. Doesn't matter what my perspective of if they are going to or not, but if that continues to happen, financials, the XLF and the energy stock, not the energy stocks, but the financial stocks will look very appealing. And I believe that is one reason that has driven a lot of this bullishness that we have seen. The best performing sector since that low in November, well, when I did this like a couple weeks ago at the end of March through Q1, from that low in November, the best performing sector was the XLF over tech. So I don't know what it is now. It definitely might be financials for how much tech really got hammered here over the past couple of weeks. Let's just take a look. Let's just take a look. How about that? But if that scenario continues to have, if yields continue to go higher and we don't really get any moves higher, Federal Reserve moving higher. Yeah. So since that low in October, the best performing sector is financials. Okay. So if that continues to happen, that is very, very, very good for financial stocks. They're able to borrow from the Federal Reserve at a lower interest rate, at a lower Fed funds rate, right? Which I believe the Fed funds rate is at 5%. They would be able to then loan it out to the market at a higher interest rate. So if interest rates keep going higher, it does not mean the Federal Reserve has to increase the Fed funds rate. It does not mean that. Now, that's not typically normal market behavior, but I'm just saying it's not something that we absolutely have to see those two work in conjunction with each other. So, if we do continue to see that dynamic play out, just understand that financial stocks will be very, very good in that kind of market scenario. The only downside is they have a lot of long term bond exposure, which, as long as they can get away with not having to liquidate longer term bonds or bonds they're going to hold to maturity or debt they're going to hold to maturity, then they can skate by and they can do the whole borrow at a lower from the Fed and issue debt to the public at higher interest rates. Anyways, so if we do see yields continue to trend higher and we get no news or no mention of higher interest rates or higher Fed funds rate out of the Fed, yeah, I mean that's a really good environment for financials. So just want to bring that up because we have seen financials do very well through Q1, and they are still the best performing sector since that low that we put in back in October. And I don't see a reason why they probably won't be going forward unless they get hit with some liquidity issues and they got to sell those longer term assets, which are hugely devalued because they were issued at lower interest rates. The banks bought them, and now they're massively devalued because interest rates have moved higher. So if that scenario presents itself, we can talk more about it. But for now, financials might be really good.